Hi, everyone. Thank you for joining us today. We're excited to present an engaging discussion. Here today with us is Stephanie Williams, CFA, Portfolio Manager at TFR Capital. She has nearly over 20 years of experience spanning from portfolio management, investment strategy, and trading systems. Stephanie has held key leadership positions at prominent firms including Envestnet, PlaySmart, and TFR Capital currently. Drawing from her expertise and her background in advisory services, Stephanie provides valuable insights for investors and advisors navigating today's dynamic market landscape. Her team's approach emphasizes more on comprehensive risk management, thoughtful strategic asset allocation, and the development of tailored investment solutions that meet each of their individual clients' needs. Welcome, Stephanie.
Thank you for having me.
Stephanie, before we dive in, let's go and we're going to talk about what we're going to discuss today. So 4 of TFR's 4 distinct workflow capabilities are dynamic modeling portfolios, utilizing our real-time functionality on the Alphathena platform. We also have transitioning portfolios we're going to discuss today on how you can transition a legacy portfolio more tax efficiently and rebalance at the same time. In addition, we're going to talk about accounts and security preferences, such as security equivalences, where you automatically recognize an equivalent position such as IVV versus SPY and make them interchangeable to help minimize unnecessary tax trades. And finally, we're going to cover trade restrictions and trading instructions, with flexible controls of do not buy, do not sell, and do not trade. And we're also going to discuss how you can add trade instructions utilizing the Alphathena platform and including VWAPing for executions for optimal timing. Stephanie, before we dive into the hands-on demo, could you tell us a little bit about creating your model, uploading your model portfolios on Alphathena, and share a little bit on your background as to why TFR Capital uses the real-time pricing and the dynamic weighting, and why is it so important? Specifically, how does it impact your process for investing, and what are the advantages of utilizing this?
Sure. Along with the direct indexing on the Alphathena platform, we also utilize custom models. We have a few strategies that we have screened and created, some holdings, 30 to 35 holdings. We like to use the dynamic model, meaning that at any given time when we invest a portfolio, all clients are essentially investing at the same weight. So if I create a model today and invest clients, and then I invest a month out, I want the clients in the future to receive about the same weight of what that holding would be. So to create a custom model, it's very simple. Going to the create function, click on the model tab. It will bring up a drop box, and you can simply drag and drop a CSV file of your custom model. It only needs to hold the ticker and corresponding weight. Very simple. You can drag that over, follow the prompts, drag over your tickers and your weights, upload this into the platform. Once it's uploaded in the platform, you will see your model below. This is a good place where you can check to make sure all the tickers imported correctly. You can glance at your weights just to make sure that that is correct as well. And when you go to save the model, up at the top of the screen, select custom weight because you want this model to adhere to your custom weights. You can give it a dynamic name or a custom name that's helpful to you to know which model it is. And then the important part is in the advanced settings, you want to select the middle box that says support custom weight pricing. So what this will do is at this given time, it is going to save your model at the weights with the corresponding or with the current market price. So by checking this box, this means that in the future, you can update prices real time. So we'll save this model. That's the most important feature. If you want a dynamic model, then you need to select that button.
And let's say you have a model already, you're ready to trade. What are the steps that you do before you actually trade?
Sure. So we have, say we're fast forward, we have all of our models in the system. I have a new client come in that I want to trade to one of our custom models. So I simply select the model that I need to trade against. And then I can scroll down to the middle of the screen where it says reprice custom weights. If you click on this button, what this will do is it will update your model to the current market value real time. So it also, if you hover over it, it'll give you the day of your original model, and then this will tell you what time and date you're repricing to. So when you click that and select yes, you'll notice that your custom weights or changing. Oh, the screen's not, there we go. Yeah. So your custom weights in the far right corner will update to the real-time market price. Again, this just ensures that any market movement that has occurred since the beginning of when you originally uploaded the model, the weights will be reflected accordingly due to market movement.
And now that you've showed us how to update a dynamic model, let's say you have a new client that comes onto the platform and you want to take a look at their account preferences and set them all up. How do you go about doing that utilizing the platform?
Sure. So once we have our models set in the platform and we're ready to go and trade a client, you just simply select the client, select account preferences, and then this has any hard-coded setting that you want to keep permanently on this account. So some of the most common ones that we use are trade restrictions. We will use these for various reasons. An example would be we have a client that works for Microsoft. They have high exposure to Microsoft through their company sponsored plans or what have you. They do not want to own additional shares of Microsoft in any model that we trade. So you can simply add in Microsoft, click on do not buy, and that will trade around Microsoft if it is held in any of your custom models or in the index. Similarly, we have a client that may want to, they have a ticker that they want to own. It's not in one of our models. It wouldn't be in an index. So they don't want to open a different account to hold it separately. So they instruct us to purchase it in their account, but we don't really want it to affect any of the management that we're doing. So we would simply enter the ticker. We could enter a do not sell if they simply just don't want us to sell it. If they want to maintain the exact number of shares, then we would put a do not buy and a do not sell, and that would exclude the ticker permanently. So those are some features that we use in an account level. If you scroll down a little bit below, you can also set firm-wide restrictions. We utilize these for, sometimes we would hold short-term cash in a higher earning money market or in a cash ETF, short-term cash ETF. Sometimes we have a portion of their portfolio. We're not exactly sure what strategy we want to use, but we want them in the market. So we might just put them in a broad-based index like VU. But we're holding these for a particular purpose. And if the account is traded for any reason before that, we do not want that ticker to be sold. So you can give we know if we have Bill in a portfolio, that is held for a short-term purpose. I don't want to trade it. I don't want that, the proceeds of that to be deployed throughout the portfolio. So we would use firm-wide restrictions in this case.
And the firm-wide will just be set across the board for
across the board.
Capital. Yeah.
Correct. So any account that you run under the TFR umbrella will adhere to those firm level restrictions. Great. Another, I guess, setting that we use quite a bit, security equivalence. Our most common one would be Goog and Goog L. Say we have a client that currently holds Goog, but our model holds Goog L. We would not necessarily want the client to sell their shares of Goog and incur a taxable gain simply to buy Goog L. To us, that is interchangeable. So we can instruct the system to treat Goog and Goog L as the same ticker, and that would save us, like I said, mainly for the tax impact. Sometimes for optics, clients are, why did you buy one and sell the other? And so the system will treat this simultaneously if you have the equivalents in. Also, if you look to the left, there's a lot of common ETF equivalents that Alphathena has put in the system as well, kind of for the same purposes. Now, there is a setting in transition that we'll show in a minute. You can opt not to use security equivalents if you want. You can set them up so that they're hard-coded in your settings. However, when you go to do a transition, you may or may not want to trade the equivalents. Some reason there may, some instance, there may be a reason that you want to go ahead and trade both. So you can select that, and I'll show you that.
And again, you're just treating this as if they're interchangeable and treating them for tax, for the tax cost and the tax benefit, and keeping them interchangeable.
Correct. Yeah. The most common reason would be we don't want to sell one ticker that is very similar to another ticker and incur that capital gain when we could use those potential gains budgets in other tickers in the portfolio.
Right. Makes it more tax efficient.
For sure.
So then let's move over to a transition. Stephanie, walk me through how you would do a transition utilizing our transition tool at Alphathena.
Sure. So you can transition a portfolio to any of your custom models, to any of the direct indexing that you have set up. Since we've already kind of gone briefly over a custom model, let's use an index for this example. If you can see, I created a couple of different indexes against the S&P 500. You can certainly index across the S&P 500 as a whole. However, some accounts, we don't want to hold that many tickers. We may only want to hold 50, 75, 100. So depending on the account size and the client's expectations, what have you, we will create an index based on those factors. So for this example, let's use the S&P 500 75. To me, that just means it's an index on the S&P 500 with 75 holdings. So the transition options for capital gains rates, we typically leave the default rates in there. I want to get the most conservative estimate possible when I'm showing a tax bill or giving a tax bill. So you can certainly change these. However, we leave the defaults here.
So you err on the most conservative approach at the highest tax bracket.
That's how we like to show these examples. For client scenarios, several different settings here that you can use to get different outcomes. When I run a transition, especially for a taxable portfolio, I like to see if I run the portfolio wide open, meaning I put no constraints on a gains budget. What is that going to look like? How much in gains will I incur? So I'll do that scenario, as well as I'll run another one limiting the gains. So the full transition is what we'll set up first. Level 1 is simply a rules-based optimization engine. So those are typically reserved for our non-taxable accounts. Level 2 is where the tax optimization comes into play. So if it's a taxable transition, I always start out with level 2. Coming down here, so these are some additional settings that can be used. The most common that we use would be the avoid wash sales and this retain equivalence, like I mentioned before. And again, this is where if you want the optimizer to treat, say, example, Goog and Google as one security, then you would click this button. If you're okay with it buying and selling whatever it needs to, then you could leave that unchecked. Another setting that we commonly use is this cash reserve. Sometimes we may have fixed income vehicle that we want to invest for a client. And so we would want to reserve that cash out so that the rest of the portfolio is invested in the index. So let's put an example of a negative $50,000. This means that it's going to trade and leave me with at least $50,000 in cash so that I can use that elsewhere, primarily in our case for like a fixed income security or something that's not traded on the Alphathena platform. This next column of settings, we showed you earlier how you can restrict a security on the client account. That simply just does not trade the ticker, whether you do not buy, do not sell, do not trade at all. Say you have a ticker in the account and you don't want it to be included in the optimization as far as tracking error calculation. So let's pretend I've excluded Apple for whatever reason. I can select it here, click on the plus sign, and then check the box that says exclude fully retained securities. So what this would do is it will not even consider Apple in the tracking error calculation. One of the most common reasons we use this would be, like I said earlier, if we have some excess cash on the side in a higher earning money market, that would be for a short-term purpose. So I don't necessarily want that big cash drag to impact my tracking error estimate. So I would simply include this to where it's moved over in the transition. I'm not trading it, and it's also not going to be included in the tracking error calculation.
So you typically utilize this functionality for a money market or a mutual fund or any security where you're looking to just transition it over and not have any trade impact whatsoever.
Right. Not any trade impact, and then again, if you check that box, it won't impact your tracking error results either. Right. Once you have all the settings in place, you can easily click copy, and this will save those main settings for you, and then you can make any slight adjustments. In this case, I want to limit the gains to 25,000. I want to see how does the portfolio change when I limit the amount of gains as opposed to letting it trade whatever it needs to trade. So you can run up to as many scenarios. I think I've run up to 4 at a time simultaneously. For time's sake today, we'll just start with these 2. And then set your transition, plan going. Again, this will run both scenarios simultaneously and give us the results. So the first result, I'm gonna have to put on my glasses now so I can see. When you first come up, it gives you a nice little summary. These are both scenarios side by side. You can see on the left side the full transition. I did not limit taxes. I'm taking around 71,000 in taxes, almost 72,000. My tracking error is near 0, which is definitely expected. I didn't limit the portfolio. It should trade whatever it needs to trade. I can compare that to the second scenario where I did limit the gains at 25,000 and my tracking error is 0.87, still a very good tracking error for a taxable portfolio. But this just gives me an idea of kind of where my tracking error is going to be at any level of gains that I take. So I might even run another one with zero gains. How does that affect my tracking error if I take no gains at all? So those are just some different reasons why I would use different scenarios.
So it's more of an art and a science because you're looking at 3 variables, right? So you're looking at your tracking error, you're looking at your P&L, and then you're also looking at the tax impact, and you're just kind of
correct
seeing which one would be best for your particular client.
Right. And sometimes, we're given a tax budget by a client. They will tell us, I do not want to take more than this in gains. And then other times it's kind of like, well, just don't take more than necessary. So in that case, you're right. It is definitely an art, not a science. So you can just input different levels of gains. And typically where I would cut that off is where I see not a big reduction in tracking error or a gains change. And so I'll take as many gains as possible with the lowest amount of tracking error that I feel comfortable with.
Yeah.
If we want to dive down into either one of the scenarios, you can do that as well. And it gives a little more detail. So we'll start with, this gives you, your starting portfolio value, cash, and then it shows the capital that's deployed into the model. The cash add remaining, you'll see here, is the $54,970. This is good. I told it to reserve $50,000 for me to do as I needed. So leaves a little bit of cash left over for miscellaneous small withdrawals, fees, what have you. In the center, it gives you the breakdown of gains. So, you can see that I'm netting out to 25,000, which is the parameter that I gave it. And then again, it gives you an estimate of the tax bill, which, as I stated before, we use the most conservative estimate. So if you were to have short-term gains in here, that would, we like to give the most conservative estimate for that case. Right. And then the final column is just a little bit more detail of, the tickers that you're increasing, decreasing, new buys and sells, what have you, and your value of your trades there, buys and sells. If you scroll down a little more, this will give you a summary of the transition. This screen right here automatically shows you all trades by tax lot. So it will give you an example if you're just transferring it over, you're keeping it in the portfolio. If you're keeping it, buying additional, keep transferring it and selling. And then close means it's transitioning over and selling completely. And again, this view right here is by tax lot. Something to keep in mind. Some of the things that I like to do after I run a transition is I like to look at the actions link. This will export a spreadsheet for you, and it gives you the trades so that you can see exactly what tickers you're buying and selling in a spreadsheet. If you want to, this is done by tax lot as well. So if you'd like to, sort this, if there were multiple tax lots and you want to sort it to get your tickers together, you could do that. Just kind of, I just kind of do a quick perusal of this to see what I'm trading. Another link that I use is the post-transition portfolio link. And this is good for diving into more granular information. It will give you your portfolio's post-trade weights. And then it also gives you the weight of the index, or model that you're trading to. So if I were to have a higher than acceptable tracking error, this gives me an idea of where I can pinpoint to go. I'll look at active weights. Where am I furthest away from my model? What tickers are those? And that usually gives me an idea of what tickers are contributing, whether I'm overweight in those, underweight in those. That usually explains your tracking error.
So it gives you more granularity into the details of what the optimizer is doing and why, where the weights are coming from.
Correct. So, if it pointed out a specific ticker and I thought, oh, okay, this is what's contributing to the tracking error. If it was mainly because I wasn't selling it because of gains, then I might want to increase my gains budget, see what that does to it. Or, it just kind of gives you an idea of where to start if you want to know kind of what is causing the tracking error.
And it's always good to spot check prior to trading too.
Yeah, I like to check everything before I trade. Just, from experience, it's good to know exactly what you're sending over. So yeah, I definitely check these, especially on a brand new transition, bringing over a new client with their legacy holdings and we're transitioning to one of our models or an index. Once you get the results, I guess, and you're approving them, then you can preview your orders. This will bring up a box, and this is all of your trades. This is not by tax lot. This has rolled all the tax lots together, so you can sort by quantity, kind of see, the number of shares you're trading. You can sort by ticker if you want to know, alphabetically kind of what you're trading. Different ways you can view this screen. This is. If you go to columns and add not held, this is the trading instructions that Carrie was talking about earlier. We asked for this, I should say. If we're trading a large volume of shares, if we're trading several accounts at a time and we have a large volume of shares trading the same ticker, or if there's a thinly traded ticker and we want special instructions to go to the trade desk, you can mark this not held. If you would like to give instruction through the note box here, you can do that. What this does is it sends it to the trade desk and it doesn't send it straight to the market. I've used this for different reasons. I've used this just because of a share quantity. I don't want to send, 100,000 shares of a ticker straight to the market. So I'll mark that not held. I can tell them VWAP. I can tell them inline. I can even tell them nothing. And typically, if they know how to work the trade, but if there were a particular ticker, maybe a foreign ticker or something that was funded in a legacy account, and I really wanted the trade desk to work that, then I would mark that not held. I could call the trade desk, very simple, give them your master account. They can pull up the trade and work that. You could even put in the note, call me when you get this trade. Very easy way to communicate. That note does flow through the trade file through the fixed connection. So nothing else is needed on your part.
And you're utilizing, remind me again, you're utilizing Schwab as your custodian, so everything feeds over through Schwab.
Yeah, sorry, probably should have said that. Yes, we use Schwab as our custodian. So yes, all of our trades will go to their trade desk and flows through. I will say, so the send block orders, if you keep that button checked, then all of your trades will execute in your master account, your block account, and then allocate accordingly. If you're trading one account and you just want to see the trades right then, you can uncheck that box and that will execute the trades directly in the client account. I've done both. I've followed both through on the custodian platform to follow the trade, and it pretty much works instantaneously. So.
Great. And finally, Stephanie, so all of the details that you went through today was TFR's unique, trading and how you guys utilize our system. But you're not just using our system for direct indexing. You're also utilizing the Alphathena platform for a majority of your trading too for your custom indexes, right?
Yes, correct. For our custom models. So we typically don't make a lot of changes to our models. But however, I do at any point in time want to know, what the weights are. And so by using that custom reprice custom weights feature that we showed earlier, that will update my model real time right then and there. So I can always see what our exposure is to each ticker, how it's moving, with the market fluctuations. So I will review that. Even if I'm not trading an account, I will still use the platform to keep up with that. So.
Okay. And thank you, Stephanie, for your time. And now I'm just going to open it up to any questions to see if anyone has any questions. We have one question. Stephanie, they're asking, how long does it typically take for a setup for a new client when you transition a new client over initially utilizing the Alphathena platform?
Oh, okay, sure. So depending on the client, if we need to add in some specific restrictions that you saw, that was very simple to do. The client data is already, fed over from the custodian. So really no management that way. I would just have to go in and do any hard-coded settings updates prior to running a transition. And then as far as running the transition, that really kind of depends on, the funding assets, the gains, how restrictive you're being with your gains budget. So if it's a simple transition, I can get it done in 10, 15 minutes. If it's something where I'm running multiple scenarios, and then I'll make some setting changes and rerun, it can take a little bit longer, but it's very intuitive, and you kind of learn what settings affect different outcomes. And so as you get more familiar with those, it makes it a smoother process.
Great. And I just wanted to mention the folks that are utilizing the LinkedIn, you can ask a question by posting it within the comment section as well. We have another question. was how steep is the learning curve when you utilize the Alphathena platform? And are there resources for support available for onboarding and training?
Sure. Yeah. So the learning curve, I mean, if you're somewhat familiar with direct indexing or utilizing custom models, is not difficult at all. The platform is very simple. A few phone calls with or Zoom calls with Carrie and Mohan, and they can walk you through. When I began actually setting up my models, I could have them on the phone with me or on a Zoom call. They could show that as well. I think the first time I did a transition, I probably had them on speed dial as well, just to kind of, get a reminder or a refresher of the different settings and, what, if I wanted the system to do this, how do I do that? Both of them sat with me when I sent my first trades through. That's always nervous when you're using a new system. So I would say the learning curve is not difficult at all. You guys are always on call 24/7. It appears. Anytime I've emailed, I've gotten a response immediately. It's been a phone call immediately. And also sometimes if I can tell them, I have a question, it's not urgent, just curious, how would I do this? Carrie will show me through the system and send a video recording, and she will walk through what it is I'm trying to do and send me a recording of that, which is very helpful. It gives me something that I can go back to if I've forgotten something I don't use a lot. So I would say the support is top notch.
Great, great. And I think that's it. Again, Stephanie, thank you so much for your time with us today. And if anyone has any other questions, feel free to reach out to us at Alphathena. And you can also scan for your free trial to use and utilize the QR code here. Thank you, everyone, for your time.
Thank you.
Thanks.